Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. And by decode, I mean we try to make sense of the boring stuff so you don't have to. Today we're diving into Illinois Toolworks, or ITW's latest proxy statement. Don't worry, it's not as dry as it sounds. Think of a proxy statement as a company's yearbook, but instead of senior superlatives, we get juicy details about who's on the board, how much they make, and what big decisions are coming up. You might think it's just formalities and legal jargon, but really it's a glimpse at the power structures in a public company, including a shareholder proposal about golden parachutes. So it's not all snoozeville. First up, the basics. Illinois Toolworks, ticker symbol ITW, is a global industrial company. They're not exactly a household name, but they make a lot of the things that other companies use, like specialized fasteners, equipment, and consumables. Think of them as the supplier's supplier, and this report gives us an idea on how the shareholders of ITW will vote. Hence, we're decoding it today. The letter to shareholders gives the executive summary at a high level, boasting about their strong business model in 2024 and strong financial results as a result. They are especially proud of boosting profitability and margins and record earnings, operating margin, and after-tax return on invested capital. They're calling the next 6 years the next phase of their enterprise strategy, focusing on organic growth. Now to the actual decisions at hand. At the annual meeting, shareholders will be voting on electing 12 directors, on executive compensation, ratifying the appointment of Deloitte as their accounting firm, and a shareholder proposal on termination pay. Let's meet some of these directors, as biographies are provided for the folks that want to get elected. There are 12 nominees this year. Most of them are independent, meaning they don't have a direct financial tie to ITW other than their board compensation, with the exception of the current chairman and CEO. The biographies are short but include education, public boards, and professional backgrounds. A lot of the nominees come from financial and manufacturing backgrounds. The board actually has categorical standards for director independence, spelling out all the things that might prevent someone from being independent. This is a good practice and shows they are serious about avoiding conflicts of interest. Also, the board has determined that everyone on their board, other than the CEO and chairman, are considered independent based on those standards. A good portion of the report goes into corporate governance, with one important aspect of that being risk oversight. A good sign is when a board sees and manages risk, and here it notes that risk is handled at the board level with the audit, compensation, governance, and nominating and finance committees. They also look at company management and its enterprise risk assessment. Areas that management and board pay attention to are the company's overall strategy, cybersecurity, and sustainability strategy. Of course, ITW did include the high-level financials in its proxy statement, and I said before that they boasted of strong financials. But let's see what that actually looked like and what it might mean. According to the proxy, earnings per share were $11.71, a 20% increase and a record. The operating margin was 26.8%, also a record, and the after-tax rate was 31.2% increase and a record. The operating margin was 26.8%, also a record, and the after-tax rate was 31.2% increase and a record. The operating margin was 26.8%, also a record, and the after-tax rate was 31.2% increase and a record. The operating margin was 26.8%, also a record, and the after-tax rate was 31.2% approach to business. Generate a lot of profit with as little capital as possible. What about director compensation though? Here they disclose that non-employee directors get a retainer, but no fees for meetings. So showing up is just part of the job. In 2024, the annual cash retainer was $140,000. There are some other payments for lead director and committee shares. All board members get $85,000 worth of stock grants as well, except the non-executive chairman, which gets a $25,000 immediate vesting. It's time to talk about the juicy stuff. Executive compensation. ITW says their compensation philosophy is to reward executives for achieving their goals, and they use both base salary and variable performance-based compensation that is linked to company success. This makes executive compensation an impressive and performance cash and stock options. The specific metrics and payouts are tied to the specific executive's role. Some are tied to overall company performance, others to specific segments. For 2024, payouts to the NEOs, or named executive officers, for the company performance results was 56.5% of target. These officers are rated on operating income growth and organic revenue growth. So they didn't knock it out of the park, but they didn't do terribly either. The compensation committee is making a big change for next year. They're getting rid of the cash component of the performance awards and making it all stock. This is good for shareholders since it more closely aligns management pay with share price performance. They're also adding a new metric called CBI yield, which stands for Customer Back Innovation Yield. This is a year-over-year increase in revenue generated by a new product or service that provides an increase to customer value as compared to existing available products. It shows how they are rewarding innovation. ITW has policies and practices to make sure compensation is aligned with their results and stock performance, including some things they don't do. They don't let executives hedge or pledge company stock. What this means in plain English is that in ITW, executives can't bet against their own company or borrow a ton of money with their shares as collateral and then slack off. Because if the stock does badly, the bank loses instead of them. It's about making sure managers have skin in the game and aren't incentivized to take excessive risks. And finally, there's the shareholder proposal. This one's about those sweet severance packages executives get when they leave a company. The proposal wants a shareholder vote on any new or renewed pay package for senior managers that exceeds 2.99 times their base salary plus bonus. ITW's board is recommending to vote against the proposal. It is interesting that shareholder John Cheven is requesting that this proposal. It is interesting that shareholder John Cheven is requesting that this proposal. It is interesting that shareholder John Cheven is requesting that this proposal. It is interesting that shareholder John Cheven is requesting that this proposal be considered. And it is even more interesting that similar proposals at FedEx, Spirit AeroSystems, Alaska Air, Abby and Pfizer have all received between 51% and 65% support. Perhaps shareholders feel executives are too protected or that these payouts are unjustified. ITW's board says this change would impair their ability to attract and retain top talent. That might be true, but shareholders should also weigh in the fact of an executive getting a huge payout after failing. Okay, so after diving into the ITW proxy statement, what do we make of it all? ITW seems to be in a pretty strong position right now. Their financials are solid and they're laser focused on making the company even more innovative and efficient in the next phase. However, we should be looking at their compensation more carefully as we're not in the board or part of the auditing team. This is a well-managed company with a clear direction that wants to bring top talent and also seems to be acting responsibly when it comes to risk and governance. The big change for 2025, shifting to more equity-based compensation and focusing on customer-backed innovation, tells me they're putting their money where their mouth is for these next few years. Thanks for watching. If you enjoyed, please subscribe, like and comment below. Let me know what companies you want decoded next.